So have you ever wondered what the mindset of a profitable Forex trader is actually like? Well, in today's video, I'm going to talk about the topics and the traits that I feel like the average profitable Forex trader actually possesses. And this is coming from someone that trades full-time for a living. So I feel like I am quite qualified enough to actually talk on these topics. So I feel like the main trait is patience. We're going to talk about this first because a lot of people won't actually have the patience to actually sit through the whole video. So maybe to train your patience in your trading, just sit through the whole video, leave a like and subscribe to the channel, and that will maybe make you a better trader in the long run. The main reason why you need to be patient in your trading is you need to wait for the perfect setup to show up. There's no point entering every single trade you see just because it looks like a good setup or you have 2 out of 5 confluences. It's not really going to win in the long run. Obviously, you could have trades where it has 2 out of 5 confluences, then it goes on to win, which obviously tempts you into doing the same again. So you'll see another setup next week, which will be a 2 out of 5, and then you'll want to enter that trade. But if you stick to the plan with 4 out of 5 or 5 out of 5 confluences, then you're more likely to win and build consistent profit on your account. The easiest way to actually improve your patience is by having a strict trading plan. So a lot of people have a trading strategy and they have a few confluences written down, but you need to have a strict plan. So one that's going to tell you exactly when the trade is invalid. People will see a few confluences and then they think the trade is valid, so they'll just take it. If you're in a trade or you're about to enter a trade, you need to know whether it's still okay to take the trade. Once you have actually got the entry confluences out of the way, then you can move on to managing the trade. This is where a lot of people actually fall short in their trading, and it means that they're leaving profit on the table every single trade they're actually in because they don't have the patience to hold the trade to the take profit. And by having a strict trading plan, you can say only close out early if this happens, or if this happens. Only close out before it actually hits stop loss if this happens. So the only time you actually want to close out the trade before the stop loss or the take profit is when the trade becomes invalid. So it no longer fits your trading plan, so you don't want to be in the trade any longer. Let's say you're 5 pips away, 10 pips away from your trade, hitting the take profit, and you're trading with a 1 to 5. This is obviously 1% profit in the trade that's left on the table. And these people will close it early, even though it's still valid to go to their take profit. And the reason they do this is this has happened in the past where they haven't closed out early, so they're holding to the take profit and it doesn't actually hit the take profit. So they want to do that again, just so they don't miss the take profit actually being hit. But if you think about this over 5 trades or 10 trades, you're missing out on 5%, 10% profit over a couple of weeks of trading. So if you look at your yearly results and you think, how many times did I close early and how many pips did I actually close early? And then you base that off of your risk parameters and your stop loss size, you can quite clearly see how much profit you're actually leaving on the table because you lack patience in your trading. You can't wait for the trade to hit the take profit, so you close out early instead of waiting for the full target to hit. An easy way to actually improve your patience from your trading experience is by using a journal software. You can use any journal software which you actually like. The majority of them actually have a feature where you can set filters for each trade you've actually taken. So you can set a filter for management of the trade. So the entry and the exit. If the entry is all good, you've traded the plan perfectly, that is great, doesn't really affect your patience. But for the exits, you want to kind of grade your exits. So did you close early? You can have that as a negative filter. Did you let it run to the take profit? Have that as a positive one. Did you close early unnecessarily? Have that as negative. And then did you close early because the trade was no longer valid? Have that as a positive. Because even though you closed out the trade early, if it does fit your plan and the trade was no longer valid, then this is an okay reason to actually do so. And the main point with patience is that if you're confident in your strategy, you've done your testing, you've put hundreds of hours into your back testing, actually developing this strategy, then you're going to be confident in the trades you're actually looking to take. You're not going to think, I kind of want to trade today, let me just take this setup. You're going to want to wait for those high quality setups. At the end of the day, you know your hard earned money is on the line for every single trade. So would you want to risk that on a setup just because you want to trade? Or would you rather wait for a setup that fits the plan that you've actually tested over the past few months or even years of your trading career so far? The second trait of a highly profitable trader is that they focus on the long-term growth of their account. So they have a long-term perspective when they're actually focusing on their trading performance. A lot of traders nowadays, they get to the point where they're making good profit every single month, and this is the only thing they focus on. How much can they make in that week? How much can they make in that day? how much can they make in that month. But you need to be focusing on how much can I make over the next 6 months, over the next year, over the next 2 years. If you're trading with high risk, trying to make as much as you can within one single month, it's going to get to the point where you might hit a losing streak. And how are you going to recover from this? You need to focus on the consistency of your profits rather than having one crazy month and then losing 5 months in a row. It could be that this 1 month covers 5 months of losses, but I'd be more impressed with a trader that has 2 to 3% per month rather than a trader that will make 25% one month, minus 20% the next month, minus 10%, and then minus random amounts every single month. I'd be more impressed with someone that is consistent and they know exactly what they're doing. They follow the same plan every single month, the same setups, the same risk management. I'd be more likely to invest my money with them. And if I was a prop firm, this trader would be the best sort of trader to actually A-book, because consistently showing profits over and over and over again is something you need to focus on in your trading. If you can make a hell of a lot of profit in 1 month now, how do you know that's going to continue in 5 years time down the line? So how are you going to be able to pay for everything if you're just trading erratically every single month? A lot of traders that actually succeed, they focus on, okay, if I continue growing this account at a steady pace, this is what it'll be like in 5 years or 10 years. If I continue this slow growth, this is where I could get to, instead of just focusing on next week or this week. And the third point is profitable traders understand the importance of risk management and actually managing their risk depending on the way they're actually trading and the style that they're actually trading. If you're taking trades every single day, then you need to be aware that over a month, you could be exposed to 25% or even 30% of your account size in that single month. Let's say, for example, you have a 50% win rate. Over this month, hypothetically, you could lose a lot of those trades, maybe even all of those trades. And how would you be able to deal with this? Because your account size would go down 30%. So if you're trading all the time and your win rate isn't super high, I feel like you need to manage your risk according to the way you're actually trading and how often you're trading. The way that I trade is a couple trades per month, and I'm able to add extra risk to these trades because I know that worst case scenario, I can lose 4 or 5% in a month. That's including scale-ins and if I lose every single setup. So I know that if I lost every single month for the next 20 months, that's how long it would take for me to actually blow the account. Whereas if you're risking 30% every single month, then you can quite easily lose a large chunk of your account within a couple months or a couple of weeks of trading. So you need to work out, using your win rate, using your average risk to reward, what risk do you think is acceptable to actually put onto each trade that you're actually taking. And this kind of brings us back to the trading plan as well. If you look at a trader that has good risk management and a good trading plan, their losses will all be of similar size. You know, I never have a loss above 10 pips because I know that 10 pips is 1% risk because I use set lot size as well. And I'd never want to have a loss bigger than this. Obviously you can have losses smaller. That doesn't really matter. That just increases your profit factor anyway. You want to make sure your wins are 2, 3, 4, 5 times bigger than your losses on average every single time. You know, you can have a win rate that's 30% and you could risk 2% per trade. But if your risk to reward is really high, then this is fine. But you need to know that you can only risk a large amount if your win rate is high with a lower win rate. You know, you'll see a lot on social media, a lot of these traders who make a large amount of money with a small account size. And this kind of instantly shows a good trader that they're not using proper risk management. If they're able to make 40, 50% on a single trade, how are they using proper risk management? Because you can't be risking 0.5 or 1% on this trade because you're not going to catch a 1 to 50 with full volume. This just isn't going to happen. So you've got to think, are these people good people to follow? Are they good people to actually take advice from, whether it be risk management or their overall trading strategy? And you should focus on sticking to a set risk on every single trade. And the main reason for using set risk is, let's say you trade 1 to 3 risk to rewards and you risk 1% per trade. Let's say you have 4 or 5 losses in a row, which is it's bound to happen. You know, it happens to me, it happens to every single trader. You're down 5%, for example, on this trade or on this trading account, and the majority of times that this actually happens to people is on funded accounts. I see a lot of people talk about it. There'll be minus 5%, and obviously with funded accounts, you're only allowed an overall 10% drawdown, so they only have 5% to play with. So after these 5 losses, they will lower their risk. So they'll lower it to either 0.5% or 0.25% risk on this trade or on the coming trades, which means now to get out of drawdown of this 5%, they actually need to make 10% or 20% if it's 0.25% risk. 1 or 2 trades, which it would normally take, now turns into 5, 6, 7 trades to actually get out of this drawdown. Whereas if you're using set risk, 2 trades, you're out of drawdown. It's as simple as that. The main reason why people do this is because they don't know how their strategy actually works. They don't know the likelihood of losing 6 trades in a row or losing 8 trades in a row. So they can't say to themselves, okay, I know how my strategy works. I've tested it before. I can trade with fixed risk because I know after 5 losses, I usually win. Or after 5 losses, I usually then go on a 3 or 4 win streak. And this is something you can actually find out from your backtesting. If you find out how many you lose in a row on average and how many you win in a row after a losing streak, you can quite easily figure out how to manage your risk around these losing streaks. And the next point is profitable traders always try to improve their trading performance. They're constantly striving for a higher win rate, higher profit factor, smaller stop loss size, just simple things which overall in the long term will increase the profit you actually make from your trading. It won't look like a lot now, increasing your profit factor by 0.2 or reducing your stop loss size by half a pip on average. But if you actually look at it risk to reward wise and the profit which you can actually make over the year from doing this, it can add up to quite a lot in the long run. You won't see it on each trade. If you look at the long run, like we mentioned previously, this is where you actually start to notice the small changes and improvements which you're actually making day to day. An easy way to actually improve this is by backtesting and constantly improving the way you're actually doing things to make it more efficient. Backtesting tool I use is FX Replay. When you're in there, you can see all the stats on your backtesting. You're literally trading, but it's on previous data. So it's like you're seeing the charts live, but it's on previous data. So you pretty much simulate your trading, as linked in the description if you guys want to check it out. And what I saw when I was actually doing this was I saw that Mondays weren't as profitable as any other day of the week. Mondays were actually negative for me. So other days of the week were positive, Monday was negative. So what did I simply do? Removed Monday. So now I don't trade Mondays. Yesterday was Monday, didn't do any analysis because I'm not interested in trading on these days. Another thing to actually improve, which is something I did as well as the days of the week, is using a fixed risk reward. So I went into my backtesting and I was like, okay, I'm going to use a 1 to 3, 1 to 4, 1 to 5 and see which ones actually hit on each trade. And I noticed that 80% of the time when a trade goes into profit, it will hit a 1 to 3. It won't go to 1 to 4, 1 to 5, 1 to 6. So it showed me that there's no point holding out for a 1 to 4 when the majority of the time it will go to a 1 to 3 instead and then reverse. So this is something you can again see, make more on each trade, each individual trade from actually hitting a 1 to 4 or 1 to 5 every single time. By doing this, going down to a 1 to 3, obviously you're making 1% less on each trade, but it increases your win rate because the likelihood of it actually hitting is increased. And once I tested it overall for 5 or 6 months, it was actually more profitable by a large margin. So this is something that I switched to. 1 to 3s, fixed risk reward, 10 pip stop loss, 30 pip take profit. Simple. Simplicity is key in trading, and once I did this, identifying setups with stop loss and take profit placement was literally a walk in the park. And moving on to the last point, profitable traders treat trading as a business and not just a get rich quick scheme. They use their trading as a way to actually grow their wealth rather than trying to flip some money to buy a new car, buy a new watch, which is why a lot of people actually get into trading, especially from social media nowadays. They'll see the cars, they'll see the watches, the cash, the lifestyle, and they want a bit of this. So they get into trading and this is their main focus. They just want to make as much money as possible in a short period of time without having to actually learn and put in the effort, just like you would be if you were starting a business from scratch. So if you're looking at the stats, only 25% of businesses actually make it and actually consistently profitable in the long term. So if you're looking at your trading and thinking, oh, well, it's only been a year, why am I not profitable? Why am I not rich yet? Just look at it in terms of trading being a business, and you could lose money for the first 1 or 2 years, 5 years even, but in the long run, businesses fail. And if you keep putting in the effort with your trading and growing it as a business, then you can be profitable in the long term. Once again, bring it back to the long-term point, treat it as a business, use your risk management, and that's how you grow your trading as a business. If you guys did learn anything from this video, be sure to like the video and subscribe to the channel, and I'll catch you guys in the next one.